Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, August the 9th, 2018, and this is the Daily Report for Gold and Silver. Mixed bag in the precious metals markets with gold trading lower today and platinum, palladium, and silver tracking higher. Gold down $1 at $1,220 per ounce. That's basis most active December. It is traded to a low of $12.1840 and a high today of $12.2560. Silver is exhibiting modest gains, up almost 3 cents on the day, currently tracked at $15.46, and platinum gaining about $5, 0.6% at $834.50, and then finally palladium, which is doing the best of the complex, up $12.60, almost a 1.5% gain at $8.99. Now, that is all within extreme headwinds caused by a strengthening U.S. dollar, up 0.6%, a 57-point gain, currently fixed at 95.46. In terms of U.S. equities today, we do have a mixed bag with the Dow Jones Industrial Average down by about 74 points, 25,509. Standard & Poor's also tracking fractionally lower, a 4-point decline at 2853, but the NASDAQ has scored some modest gains at 78.92. So traders, although we do have gold trading lower on the day, today's decline is predicated 100% by dollar strength, and we'll look at that in a second. The one thing that we can see, and we're looking at gold futures, we have had somewhat of a declining set of highs with lower highs coming into the market. That is up until today, because the high today came in at 12.2560. Of course, we have a short position at 12.17, and we do have stops at 12.27. The low today does match up with the 0.618% retracement at 12.18. But we really can glean a lot more information when we look at the spot market. Physical gold did close lower today, off $1.50, currently fixed at $12.30. A couple of interesting facets about that is that, first of all, when we do our same fib retracement, starting from our same lows achieved at the end of 2016 up until the yearly high at about 1364, we get our 0.618% retracement at 12.15 and change. What makes that so interesting is the fact that that means that we have definitely now tracked below that price point, and it seems quite clear that 12.15 could in fact become resistance rather than support. The other thing that is noteworthy is that when we look at the Kitco Gold Index and compare the $1.50 drawdown, we can see that normal trading actually bid the precious metal higher, and it bid it higher by about $4.10, but a strengthening U.S. dollar took away $5.60, and that is where we get our net change of a $1.50 decline. Therefore, my recommendation is to maintain our current short position in December futures as well as our current stop. Traders, we continue to see declines in gold price. A vast majority of the declines that we're witnessing are based upon dollar strength, but there is some selling in the market. On a technical basis, it is clear to me that since we broke these lows and actually went to a lower low than our previous low, along with the fact that when we look at a daily chart, we had a bearish death cross in which the shorter term moving average moved below the longer term moving average. I absolutely believe that at that point in time, we move from a simple correction into a bear market. We are at a price point that could be, on a technical basis, a area of support, and that's 12.18 basis the futures contract. However, until we see some sort of an upside bounce and recovery of the market, we have to remain realistic, and realistic right now means that we have to acknowledge that we are in a bear market in gold. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the daily update and weekend review. Bye-bye.